Bill Shock, why did we reject Bill? Rates to fall, a great idea. And is there much left in this post-election bank share price surge? I'm Peter Switzer.
I'm Paul Rickard. And we're mad about money.
All right, Paul. Were you shocked on Saturday night? And have you worked out why?
I was shocked, Peter, but I was also a little winner. I had some money at 5 to 1.
You're
so winners are winners. I wasn't a genius, but I thought on a 2-horse race, 5 to 1 always looks good. I had to 8 to 1, I think, on Saturday afternoon. Look, I guess shocked, not really. I mean, like the polls said it was all going the other way, but I think at the end of the day, it wasn't so much the agenda was so ambitious, but it takes a lot to throw out a Conservative government. Australians have not, if you go back to Labor governments coming into office with Gough in 72, Hawke in 83, and Kevin Ruddster in 2007, they were all incredibly popular leaders when they won government. And I'm sorry, Bill never had it. So in some ways, Australians are innately conservative, and I think that really showed what happened in Queensland.
But that fact that an unpopular opposition leader who's not ahead in the popularity polls on a personal basis has never won the election, that wasn't brought up by the media at all, really, was it?
Media thinking the ABC and Fairfax, 9 Fairfax, didn't want to talk about that. But look, that's the reality. I mean, they knew about Bill. They'd seen Bill knife Julia and Kevin, and and we all hoped that Bill was going, because he'd been so pragmatic before, not a really true believer, that he'd be very pragmatic in government. We talked about it in this program a number of times.
I think the point you made also that he was threatening homeowners with house price falls. He was threatening small businesses with wage rises. He was threatening retirees and challenging their nest eggs. And let's face it, the rural community have always been a little bit suspicious of Labor. Put those 4 groups together, and we're talking about great Australian dreams: home, retiree, nest egg, business, and a country way of life. That's big threats, and Bill in a sense looked like a dream taker rather than a dream giver. And I didn't see it before the election, but I think that's the analysis I think helps me explain why we voted the way we did on Saturday night.
Well, let's thank goodness he did, and that probably leads us to the next subject, because the markets are, it's 3 days in a row, Pete.
It has. You've jumped the gun.
I've jumped the gun.
But it's fair enough, because you are intrigued about the rise in the bank share price. I think Westpac was up 8% or 9% in the first.
Well, I'm not intrigued by
2% the next.
Peter, my question was, can it continue? I mean, I've been a bull on banks, but been wrong, and it's been very hard to be a bull on banks. I was a little disappointed with the CBA's third quarter result last week and the half-year results. So I guess there was a bit of short selling. Everyone was so anti-banks. I think, look.
Well, but also, everyone thought Bill Shorten was getting in Labor, and Labor was going to persecute the banks a lot more than the banks. So I think this is like a Joan of Arc effect. There's going to be less burning at the stake of the banks by ScoMo than under Bill, and I think the reaction has been, these guys will probably do better profit.
Yeah, so I've now been looking. I think banks rally it needs to pull back a little bit, right? I mean, as I said, the earnings reports were still pretty weak. Yields are attractive. At least NAB's now got its dividend in line. ANZ's in line. CBA is secure. Westpac, I still think there's some risk on the Westpac dividend. I think in a pullback, banks will be bought. What was holding our market up was the banks weren't going up. So we've got this sort of surge going on the iron ore price, which is just purely a function of what's gone on in Brazil and the production issues that Vale suffers. And because banks are just getting left behind, people were going crazy in anything else. And some of the stocks, I wasn't really surprised to see Woolworths lose 3% yesterday. It's way overvalued. I mean, Woolworths trading on a PE of 25 times. Look, it's a nice company, but it ain't a world beater, right? I mean, and some of these stocks got so expensive. So what we've seen in the last few days, Peter, suddenly banks have caught up, and we've seen a rotation out of some of the very, very expensive stocks out there.
Okay, right. And the last issue we want to talk about is rate cuts are definitely on the agenda. What do you reckon, Paul? Great idea.
No, I think Dr. Phil's got this wrong, Peter. I mean, I think he's look. It's going to happen, right? 92% of economists say it is.
I'll cop it.
You'll cop it. I didn't expect them to cut, but I think just Dr. Phil's got caught up into the whole sort of groupthink psychology. Okay, look, it's going to.
A lot of chief economists agree. Westpac, Combank. No,
yeah, every economist agrees, Peter, and you probably agree too.
Well, I've jumped on board.
I'm not the economist, and I don't understand it. But anyhow, look, I think look, it's going to happen. I mean, I don't think it's going to make any difference whatsoever. A more important thing yesterday was APRA getting on board with the letter to the banks talking about the serviceability ratio. In other words, the test that goes in when a bank applies whether you can actually borrow money. That's actually going to have a bigger impact on the housing market over time. That will take a little while to wash through the system because APRA is a consultation paper like APRA does, and so the bank's got to respond. I think they've got till the 18th of June. So we'll see some change, not this week, not next week, but probably in July.
And the hope is to let banks lend more money to people.
Essentially, many banks at the moment are using about 7.25% to assess when you come and you want to borrow some money from the bank. They don't measure whether you can repay the loan at the current interest rate at 4%, they're using about 7.25%.
In case in the future interest rates get that high. Here's a question to you, Paul. Do you think we'll see 7.25% home loan interest rates in this cycle?
No, I don't think we will, but we will see. But we will see the banks have a lower rate, which means people can borrow more, and that's really important for the home loan market.
It might help mortgage stress, whatever that is.
And I think the bigger issue, rather than what Dr. Phil's talking about, is actually getting this tax cut through. I mean, getting the $1,030 rebate back in the hands of people, low and middle income earners. They're the people who are going to spend it.
Yeah, good for the economy.
In July, August, when they lodge their tax returns, is really important. So I think that they're far more important steps, Peter, than necessarily the RBA cutting rates. But look, Dr. Phil wants to be part of the
Love Dr. Phil.
The group think and be a hero. Why he needed to go out yesterday? I mean, look.
I think he's a little bit scared. So for him to actually alert. I've never seen a Reserve Bank alert everyone to a rate cut.
Why not cut it yesterday? Why not call an emergency meeting of the board and just cut it rather than wait another 2 weeks?
That's a bit drastic.
I mean, it's having two bites of the cherry. I think he doesn't want to be. It's like, if I cut it, at least no one can accuse me of being wrong in 2 or 3 years' time. Yeah. I mean, I think there's got to be some doubts about just whether he's really up to the mark. I know you've been a Dr. Phil fan, but
Dr. Phil needs a medical test.
Well, I don't know. Maybe I'm just looking at the other way, Peter. But I'm not. I'm feeling all those term deposit investors out there and other people living on the retired amounts, seeing the rates come down. I don't necessarily think it's as good as people make it out to be.
Phil has actually helped the stock market because people will go chasing franking credit type dividend paying stocks.
Yeah, look, it helps the stock market. I mean, I guess it's good for confidence. Look, certainly it won't do any harm in the stress parts where people are under pressure because there will be banks will have to
drives the dollar down, and that's good for the economy.
Drives the dollar down. But at the end of the day, I don't think it's going to. What we need is businesses to borrow to invest. I don't think it's going to make a trying to think of my words here carefully, any difference to what businesses are doing in investment.
Fortunately, we know Paul knows nothing about economics. He's a stockbroking expert. I'm Peter Switzer.
I'm Paul Rickard.
And we're
mad about money.